loss, abnormal loss simultaneously, how to calculate the closing stock, and how to understand two kinds of commission. Now, you have to write one note, though it is not written in the slide, but in your exam, you have to write down one note about what? As the Del Creditor commission is given, no accounting treatment is necessary for consignor books of accounts. Got my point? Del Creditor commission is given. So consignor is responsible for that 20% loss, that 20% bad debt. The consignor is not at all responsible for that. So he will never put any adjustment in his or her book. So we have omitted that part. But in case of your exam, you have to write down that note is required for bad debt in the books of the consignor. Got my point? Okay. Now, let us come to the books of the consignee. Here, one thing we understood, that ma'am, we have to write down just sales, all the expenses, all the commission, and we will remit the draft. It is given in the books of Das Swastik Oil Mill Mumbai account. Now, let us open another two commissions account, different commissions account. It is also very easy. Commission is your income. So that should be also transferred to PL account. All incomes and gains are to be credited in the PL account. So by applying that rule, we have put the profit and loss account in the debit side, just like we do the same thing for Del Creditor commission. And let us concentrate on the bad debt part. So consignee is responsible for bad debt because he has already received the Del Creditor commission. So we pass the entry to consignment debtors, and the actual, that 20%, got my point? That 20% of bad debt is transferred to the PL account of the consignee. So that is the thing of giving or receiving Del Creditor commission, and there is one bad debt. So that is the first sum. Now let us concentrate on the second portion of the part of the consignment. That is the invoice price method, or in general term, the students often tell that this is a sum of load. Okay, but you know the invoice price and load are two different things. Okay, let us concentrate on that. So what is load? What is invoice price? The invoice price is nothing but pro forma invoice. What is that? That is the consignor sometimes sends the good to the consignee by adding up a profit, a hidden profit in the cost. Okay, hidden profit. That means only the consignor have the idea of that price. What is the cost? What is the sending price? These two are different. Suppose the cost is 100, but goods are sent to the consignee for rupees 120. So that 20 is the load. Got my point? And that 120 is the pro forma invoice price. So never forget it. Load is only the additional price, additional profit that are charged on that cost is known as load. And what is the invoice price? The sending price. In case of load sum, the sending price is higher, generally higher. Okay, so generally higher than the cost price. So it is known as pro forma invoice price. Once again, concentrate on the example. 100 is the cost, 120 is the sending price. So that 120 is called as pro forma invoice price, and the indifference price, that value, that is 20, is your load. But you remember, in that kind of profit can be added on cost or on sales. In our example, we took that the load is added on cost. That means what? 100 is the cost. You have added 20. So you add 20 on cost and your invoice price will become 120. But it can be on sales. I'm coming to that point. But why we add load? So it is to find out what are the advantages of load. Let us concentrate on these 3 points. To keep the profit and consignment secret, to give incentive to the consignee to realize the highest possible price, and to make him charge a uniform price. Okay, so these are the points. on which, so these are the objectives that on which the consignor can add the load. Okay, so load is the profit and invoice price is after adding that profit on the cost or on the sales. So let us concentrate on the journals for adjustment. So what are the adjustment we need? Mainly load is, you have to add load on goods sent on consignment, right? But you have to unload that profit on three accounts. Okay, so number one is goods sent. So the journal is given. Please go through the journal. Number two is abnormal loss. Now concentrate. Because abnormal loss, we assume that the loss has happened in during transit, right? So you you sent the goods under pro forma invoice price by adding up some load. So you have to calculate the in-transit loss on that in pro forma invoice price. That is why we need to unload the extra price that are charged in the abnormal loss. That is the reason. And the third one on unsold stock, because the consignee, he has no idea what has been actually added on the cost price. So the unsold stock is already, or unsold stock is also valued at the invoice, pro forma invoice price. So in that case, you have to unload the charges. So in these three circumstances, we need to adjust the load. Number one, remember, goods sent. Number two, abnormal loss. And number three, for unsold stock. Now, let us try to have some knowledge on this, on the formula to find out the load and pro forma invoice price. So this is the formula, basically very easy formula. So from economics, you have the concept, what is selling price? S is equal to C plus P. Just in the place of sell, I put IP, that is invoice price. So invoice price is what? You remember our example, 120 was invoice. And how to find out it? 100 was our cost price plus P, profit is 20. So IP is equal to, the formula is CP plus P. So all the abbreviations are written. IP is invoice price of goods sent, CP is cost price of goods sent, and P is your profit. And what is load? As I have already told you, load is the profit or the extra charges, right? So the formula of load is IP minus CP. Just concentrate on that. And we also understood that loads can be, you can add loads on two things. One is on cost, one is on sales. Let us concentrate the cost. I'm giving you one concrete example. Go through the example. X of Kolkata consigned goods costing rupees 2 lakh to Y of Mumbai with a pro forma, that means pro forma invoice price, of course, so as to show a profit of 25% on cost. Find the IP. Got my point? So what is our basic formula? IP is equal to CP plus P. Got my point? So now you have to understand that the profit is nothing but a load. So just below P, I have written 25. Go through the sum. Okay. Now below the CP, I have written 100. This is the thing we should learn. The thing is that you must concentrate, load is added on what? If it is on cost, cost should be 100. If it is added on sales, my sale should be 100. That is the only trick. Okay. So your load is charged on the cost. That means your cost should be 100. Please remember, very easy formula. Very easy. So the thing is that you should concentrate on which the load is added. So if it is written as on cost, cost should be 100. If it is written on sales, your sales should be 100. Now I have written CP just below CP 100 because the load was charged on the cost. And what is IP? So 100 plus 25 is 125 is your IP. So now I'm just applying the simple unitary method. My 100 is CP, which is given in the sum as 2 lakh. So I can write 100 is equal to 2 lakh. Now what I want to find out? 125, right? So 125 is my IP. So my IP is just unitary method 2 lakh divided by 100 into 125 is rupees 2,50,000. Got my point? If somebody asks you to find out the load, so what is the formula of load? IP minus CP. So your IP is 2,50,000 and your CP is 2 lakh. So your load is 50,000. So this is how to find out the load on cost. Let us concentrate load on sales, giving you the same example. Only it has been changed, that is the profit of 25% on sales. So what has been written in the previous example, it is changed in the current example, that 25% on sales. So the formula is same. IP is equal to CP plus P. What is my P? My load, my profit given in the sum 25. So I have written 25 below P. Now, concentrate, load is added on what? On sales. Here it is on sales. So what we have learned, on which the load is charged, that should be 100. So here the load is charged on sales. Sales means here the IP and nothing, right? Because that economics concept, economic subject concept, S is equal to C plus P. So the sale is my 100. So what is my CP? 100 minus 25. So 75 is my CP. I think you understood up to this point. Once again, please. IP, the formula is CP plus P. So the P is given 25 and it is charged on sales, and we know on what? On what? That would be 100. So on sales, that means my sales, my IP is 100. So the balance is my CP 75. Now, just to apply the unitary method. So that 2 lakh is what? That 2 lakh is my cost. Just before 2 lakh, what is written? Costing. So your cost is now 75. So 75 is equal to 2 lakh. That means once again, use the unitary method to get the value of your IP. So your IP becomes, just put the formula 2 lakh by 75 into 100, because 75 is the cost and 100 is your IP. It has been changed. Previously, it was 100 your cost, 125 your IP. But in this sum, as it is on sales, the CP is 25 and IP is 100. So it will become 2,66,667. So if somebody asks you in the case of the second one, what is the load? So you can say that load is nothing but IP minus CP. So my IP is 2,66,667 and my cost is 2 lakh. So you must deduct it to get 66,667 as my load. So please look at the slide very carefully. So the load is also changed, the IP is also changed, but the CP remains same. Okay, ওই দুটো চেঞ্জ হয়ে গেছে আর এইটা দেখো remains the same, because the costing just before the 2 lakh it is written as the costing. Got my point? Let us come to a concrete example of that sum. You can take one screenshot and I am just going to read out it. Okay, so a trader of Kolkata consigned goods costing 75,000 to another trader of Patna. The invoice was made so as to show a profit of 33 and 1/3% on cost. The consignor paid carriage, freight, and insurance. Goods costing rupees 7500 destroyed while in transit. That means it is your abnormal loss. An insurance company admitted the full claim. That means whatever is due of abnormal loss, the insurance company paid off the entire amount. Now, the consignee has some expenses like carriage and go down rent. 2/3 of the goods received. That means after the abnormal loss, what has been received by the consignee, out of that goods, 2/3 of the goods were sold out at invoice price. So you have to, first of all, you have to find out the invoice price so as to know the selling price per unit, right? So the consignee sent a check to the consignor for the sale proceeds in usual manner, that is after deducting the expenses and commission, and enjoyed an ordinary commission and also a deal creditor commission. You have to ask to open consignment account in the books of the consignor. Okay, so just go through this sum, take one screenshot so that we can solve the problem. Okay. So let us concentrate the solution. So now, what has been asked in the sum that we have to open the consignment account, the necessary ledger accounts in the books of the consignor. And you all know that we have to write down the place, right? So consignment to partner account we have written. Now, what is the first entry? We all know, first of all, we have to write down goods sent on consignment. But remember, the goods were sent by adding up a profit, right? That means goods are sent at a pro forma invoice price. So the pro forma invoice price is nothing but some inflated price, and it has been charged on cost. Known that the students may have some problem regarding that particular percentage, that is 33 and 1/3. Ma'am, what to do? But it is very easy. You can ask 3 times, it will appear as 99.9999. Okay, so you can take just 1/3. Got my point? That means you just apply the formula. What was our previous formula? IP is equal to C plus P, right? So what is my P? 33 and 1/3. 33 and 1/3, you can write down it as 33.33, or you can write down straight away 1/3. And on cost, that means your cost will become 100. And 100 plus 33.33, that is your IP, will become 133.33. This is a way to do the sum, because in that case your 100 will be 75,000, because it is charged on the cost, and just before rupees 75,000 what has been written. It is another important part. You should look at the term that is used just before the goods sent. It is written as costing. That means the cost of the goods sent is actually 75,000. So your cost is 100. So 100 is equal to 75,000. Now you can easily find out what is the amount of 133.33 for this figure. It will come as 1 lakh. Otherwise, you have another option, what I told earlier, that 33 and 1/3, you can take it just 1/3. Okay, so 75,000 is the cost. You just add 1/3 profit on that 75,000, it will become 25,000, and your goods sent on consignment, of course IP, will become 1 lakh. So 2 ways you can do the thing. The same answer will come. Okay, so 75,000 plus 1/3 of 75,000 is equal to, please do it, 75,000 plus 1/3 of 75,000 is equal to 75,000 plus 25,000 is equal to 1 lakh. So goods sent on consignment stood as 1 lakh. Otherwise, we can apply the basic formula. IP is equal to C plus P. C is 100, the P is 33.33. So my IP is 133.33, right? Now, the cost is 75,000. That means 100 is 75,000. So what is the value of 133.33? It will come as 1 lakh. Got my point? So that is IP. Now we know that load that are added on the goods sent on consignment, we have to unload it. So please do the unload portion. So what has been written in the ledger by goods sent on consignment, within a bracket, load on goods sent. Very easy. The goods sent, IP is 1 lakh. Nothing to do here. IP is 1 lakh. Cost is 75,000. Just minus. So you have 25,000. Got my point? Let us come to the next part. At the time of sending the goods, the consignor had some expenses, right? So expenses like carriage and freight. So we have written this too. We have added and put 2,300 in the outer column. Got my point? Up to this, let us come to the abnormal loss part. So abnormal loss, what is the formula of abnormal loss? Once again, recall it. Once again, recall it. cost of goods sent plus non-recurring expenses of consignor or consignee. So we omit consignee because loss was happened during transit. So the only the consignor's portion has to be taken here. So come to the workings part. Please go through the workings. So original cost of goods destroyed 7,500. And just go through this sum once again. Goods costing rupees 7,500 were destroyed in transit. So the cost is 7,500. We add the proportionate expenses, of course, non-recurring of the consignor. So the total expenses was 2,300. Divided by 75,000 is the goods sent. Into 7,500 is the goods lost. Of course, these two are not units. These are also the amount. Okay, 75,000 and 7,500 are actually the amount of goods sent. Actually, not the amount, actually the amount of cost of goods sent. 75,000 and 7,500 is the cost of abnormal loss. So we found out proportionate portion by applying the unitary method. So cost of goods destroyed 7,730. Now we add the load. Okay, so what was the load? Load was in a very simple way. You can do it by your own in any way. Okay, 7,500 into 1/3. That is the easiest thing, because what we did to find out the load of goods sent on consignment, we followed the same method. That is 75,000 plus 1/3 of 75,000. Here we apply the same method. You can do anything. Some students, they prefer to have that kind of workings. That is, ma'am, the total load is 25,000 for 7,500 goods. So 75,000 goods. So what is the load of 7,500 goods? You can apply any of the methods, any one of the methods you prefer. Okay, so but you should remember the logic behind that. The logic behind applying a particular formula, a particular way to finding out the key of that lock, and nothing to say here. So your load is 2,500. You add these two figures, you have the IP of abnormal loss. And of course, this is IP because we have added the load, additional profit charged here. So the abnormal loss amounts to 10,000 to 30. And we all just recall what to unload. Three things. One is goods sent on consignment. We did it. One is load on abnormal loss. You have the loss. You have the loss of 10,000 to 30. And out of this figure, you have 2,500 as the load, right? On this abnormal loss. So what we have written, two abnormal loss. Remember the journal. Actually, what I'm thinking that I will send the entire PPT to Professor Choitali Pal ma'am, so that she can share the PPT, right? So let us come to the abnormal loss load part. It will become, or it became 2,500. So we put two abnormal loss within bracket load. Now the goods are reached to the consignee. He received the goods and incurred some expenses. What are those expenses given in the sum? Carriage and go down rent. We put carriage and go down rent. Now he to sell the goods, but in this sum the selling price is not given. What has been written? Let us come to the sum once again. It has been given that 2/3 of the goods received by the consignee were sold by them at invoice price. First of all, we have to know what is the 2/3 goods. First of all, then we have to know the invoice price. So let us concentrate on the sales made by the consignee. Okay, so let us concentrate on the sale. Now, what is happening here? That original cost of goods sold is 45,000, because just go through the sum once again. Go through the sum. 2/3 of the goods received. First of all, we have to know how many goods were received by the consignee. Just concentrate on the cost price, not the invoice. I will come to the IP after that. So goods costing 75,000 sent, right? and 7500 cost goods were destroyed. Okay, so you minus it, and what remains, 2/3, you have to take the two third of that, so as to you have the original cost of goods sold. It will become 45,000. Once again, goods sent 75,000 cost. Okay, forget invoice price. Goods lost, how much? Goods lost 7500, deduct it, find out two-third, you will have 45,000. Now 45,000 is the cost, and we all know what has been told in the agreement, that you have to, the consignee should sell the goods at the invoice price. So what is the invoice price? Invoice price is nothing but one-third of profit or load is to be charged on the cost. So we added 45,000 into one-third, so it will become 15. So that 15 is added to 45,000 to have the selling price. So let us come to the selling price. Please look at the credit side. By consignee's name has been written here. So the sale price is 60,000. Let us come to the commission part. The commission is also given 7.5 ordinary and 2.5 Dale Credier. So you have to calculate that two commissions on the selling price of 60,000 to have 4500 and 1500. Okay, let us come to the last part of the consignment account, that is the closing stock. Now, how to find out the closing stock? So sold out goods, that is also cost 45,000. So original cost of goods unsold stood as 22,500. As there is no normal loss, simply we have deducted the goods lost in transit and the sales. But all these are in the mode of the cost, not the IP. We will find out the IP later. So let us come to the unsold stock valuation. So the goods of unsold stock cost rupees 22,500. Now let us concentrate on that portion, that is proportionate consignor expenses. Proportionate consignor expenses. So it will become 2,300. Look at 900 plus 1400 divided by 75,000, because it sent 75,000 goods, and 22,500 is the cost of unsold stock. It will become 200. You add all these figures, and now you add the load. So your load is what? Once again, one-third of your cost. So your load is 7500. So the price of the goods is 30,000, or the closing stock value stood as 30,890. So I put that, and then I found out the stock reserve, and the stock reserve is also, load is already, we have found out 22,500 into one-third, 7500. So this is my load, I have put it. And but remember, we have written to stock reserve, right, following the journal. And the profit arises out of this consignment 6420. Okay, so thank you, students, for your great patience to hear that almost 2 hours lecture. So now it is the time to ask the question. Now I'm stop sharing my screen. Right now it is the right time to ask a question. So if you want to ask anything, okay. Okay, very good, excellent. So the unsold stock. Okay, Riddhi, Shai, and okay. So both of you have found the exact amount. Excellent. Unsold stock is 1075 kgs. And ma'am, please explain the CP portion. Which one, Riddhi? Please, Riddhi, which one? CP means, Riddhi, are you there? Riddhi, are you there?
Yes, ma'am.
So,
Good morning.
morning, very good morning. So, what is your question? Please, once again.
Ma'am, that cost on sales.
That cost on sales. Okay, so I have to once again sharing my screen, and so that I can explain it and you can see the screen. Okay, the that part, right? Okay, so let us concentrate on that. Okay, uh, Vidit, this slide, please tell me. This slide?
Yes, ma'am.
Okay.
Yes, ma'am.
Okay, so let us concentrate on the formula first, right? So what is the formula? It is very easy formula. Just you concentrate on what is selling price. It is we get the selling price by adding up the profit with my cost. So just omitting the sales, and I have written IP. So it is the basic formula, right? And load and pro forma invoice prices, what I have already told, these two are basically different things, right? So load is what is the additional amount that you have charged on the cost, that is known as load. And what is your IP? After adding up the profit or the extra price on the cost, it is known as the pro forma invoice price. So let us concentrate the formula. The formula is very easy. IP is equal to C plus B. But what we have to know that in the sum, basically in the problem, you have to concentrate on two things. First of all, what has been sent in this example, go to the load on sales example. What has been written? X of Kolkata consigned goods costing rupees 2 lakh to Y of Mumbai. First of all, we have to concentrate the amount, and just before the amount, what is written, that is the most important thing. What is written just before the amount? It is written as cost, costing, right? You have to concentrate on that. And the second thing that we are going to concentrate, that profit is 25%. In both the example, the profit is 25%, but in the second case, it is written as on sales. So these two terminology, you have to concentrate on these two terms. One is what is written before price, and what is written before amount, and what is written on sales or on cost. Now in this sum, it is written as on sales. Now the formula is same. IP is equal to C plus P.